AT&T is the largest telecommunications company as well as media and entertainment company in the world by revenue. As of 2020, AT&T was ranked number 9 on a list of Fortune 500 companies, which ranks top corporations in the United States by revenue. In this video, I'll be telling you why AT&T is one of the best dividend stocks to own and why it should play a role in your long-term dividend portfolio. You should never invest into a company you don't fully understand. In this video, I will give you a complete breakdown of what AT&T does, how its business operates, and why you should invest in them. Please make sure you smack that like button and subscribe. It is free to do so, and it will help out the channel immensely. From the very start of the telephone, AT&T has remained a staple for over 100 years. AT&T began its history as the Southwestern Bell Telephone Company, a subsidiary of the Bell Telephone Company, founded by Alexander Graham Bell in 1877. The Bell Telephone Company became the American Telephone and Telegraph Company in 1885 and was later rebranded as the AT&T Corporation. In 1982, U.S. regulators broke up the AT&T monopoly, requiring AT&T to divest its regional subsidiaries and turn them into each individual companies. These new companies were known as Regional Bell Operating Companies, or formerly known as Baby Bells. In the end, AT&T would become 7 different companies. The firm managed to hold on to its long-distance business, and the monopoly came apart in 1984. In late 2014, AT&T purchased Mexican cellular carrier Lucicell, and 2 months later it purchased the Mexican wireless business of NII Holdings. AT&T merged the two companies to create AT&T Mexico. On July 13, 2017, it was reported that AT&T would introduce a cloud-based DVR streaming service as part of its efforts to create a unified platform across DirecTV and its DirecTV Now streaming service, with Uverse to be added in the future. In October 2018, it was announced that the service would launch in 2019, named HBO Max. The service's release date was pushed back to May 2020. Due to a strategic move inside the company, AT&T reorganized into 4 main units: communication, including consumer and business wireless telephone and AT&T mobility, and consumer entertainment video services; WarnerMedia, including Turner Cable Television Networks, Warner Bros. Film and Television Production, and HBO; AT&T Latin America, consisting of wireless service in Mexico and video in Latin America, advertising, and analytics, since renamed Xandr. AT&T is a major player in the communications market in the United States. This includes wireless and wireline telecommunication, video, and broadband services. AT&T Mobility for the fourth quarter 2020 had 800,000 postpaid phone net adds, 1.5 million for the full year, 1.2 million postpaid net adds for the fourth quarter, and 2.2 million for the year. Nearly 6 million total domestic wireless net adds. Postpaid phone churn rate of 0.76%, which is the second lowest quarter reported in the history of AT&T. The full year churn of 0.79%. Churn rate is the amount of customers leaving AT&T to join another service provider, which in my opinion is an exceptional percentage rate. The WarnerMedia segment, which accounts for 17% of revenue, is responsible for film, television content from well-known providers. On October 22, 2016, AT&T announced an offer to acquire Time Warner for $85 billion, and this is assuming Time Warner debt. The proposed merger was confirmed on June 12, 2018, after AT&T won an antitrust lawsuit against the U.S. Justice Department, filed in 2017 to block the acquisition. The merger closed 2 days later, with the company becoming a subsidiary of AT&T. AT&T has well-known channel brands that is a staple in our everyday life, some of which include Adult Swim, Cinemax, CNN, HBO, HBO Max, TBS, TNT, True TV, and of course, Warner Bros. Following its June 2018 acquisition of AppNexus, Xandr was formed by AT&T to construct a national TV advertising marketplace. Xandr was launched on September 2018 at its annual AT&T Relevance Conference in Santa Barbara, California, and was named after its parent company founder, Alexander Graham Bell. In June 2019, Xandr rebranded its AppNexus, launching to reinvest to serve as its central ad buying hub. In April 2020, it was folded into WarnerMedia. AT&T Latin America offers mobile services to customers in South America. In November 2014, AT&T announced it would acquire the Mexican wireless company Lucicell for $2.5 billion. The price includes $800 million in debt. AT&T would acquire all of Lucicell wireless properties, including licenses, network assets, retail stores, and approximately 8.6 million subscribers. On January 30th, 2015, AT&T announced the purchase of Nextel Mexico for $1.875 billion. AT&T merged the two companies to create AT&T Mexico, which currently holds the largest amount of spectrum in the country. AT&T is a huge 5G player and expected to be a huge part of revenue and should expand the globe in the future. While AT&T's 5G network reaches more than 225 million people in 14,000 cities and towns across the United States, AT&T's 5G infrastructure has made significant strides over the past few years. Recently, AT&T was the second largest spender behind Verizon, spending $23.4 billion. Despite its hefty debt load, this provided the company with valuable C-band spectrum. As of now, nationwide 5G networks currently rely on a narrower low-band frequency that offers speeds not much greater than 4G LTE. HBO Max has seen a huge upswing in subscribers in 2020 due to people not being able to go to the movies and having to rely mostly on streaming services. I believe HBO will play a massive role in AT&T going forward. WarnerMedia is planning to debut a lower-price ad-supported version of HBO Max later in 2021. The company is also set to expand HBO Max into 39 territories throughout Latin America in June. The HBO-branded streaming services in Europe, Spain, Central America, the Baltics, and Portugal will be upgraded to HBO Max later this year. AT&T said the release of Wonder Woman 1984 helped HBO Max double activations. At the end of 2020, WarnerMedia had 41.5 million combined HBO and HBO Max subscribers, up 20% from 34.6 million a year prior. The nearly 7 million net gains for this year was more than HBO added in the previous 10 years combined. According to AT&T, which said it hit 41.5 million subscribers 2 years faster than it initially forecasted. They have more than 60 million subscribers globally. HBO revenue for quarter 4 was $1.9 billion, up 11.7%, mostly driven by the growth in subscriptions revenues, primarily due to higher HBO Max direct-to-consumer subscribers in the United States. Back in 2019, the company set a goal of hitting 50 million U.S. subscribers by 2025. AT&T recently came out on Investors Day in March 2021, said that now they are expected to reach global subscribers of between 120 and 150 million for HBO and HBO Max by the end of 25, which is more than triple the subscribers they have now. While AT&T's traditional wireline voice business has undergone a period of secular decline due to wireless substitutions and cable competition, the company, through WarnerMedia, has become a diversified media and entertainment business. In July 2015, AT&T purchased DirecTV for $48.5 billion. AT&T then announced plans to converge its existing U-verse home internet and IPTV brands with DirecTV to create AT&T Entertainment. In an attempt to lower its large debt load, AT&T recently agreed to sell a stake in its pay-TV unit to private equity firm TPG and to carve out the struggling business, pulling the telecommunication giant back from a costly wager on entertainment. The transaction would move the DirecTV and AT&T TV services in the United States into a new entity that will be run jointly by the new partners. AT&T will still retain a 70% stake in the business. Together, all of AT&T business segments generated $173 billion in revenue in the last 12 months as of December 2020. That equates to a 5% decrease from the previous 12-month period. The drop was largely due to the lack of movie and television production releases due to the Rona situation. In my opinion, they have a large space to grow, and if their revenues keep increasing, this company shouldn't have any problems paying down its debt in the next few years. For years, AT&T has made its living as a classic dividend stock. The company is part of an exclusive Dividend aristocrat club. This means the company has issued an increase in its dividends for at least 25 consecutive years. That's been a nice reward for owners of the AT&T stock. With solid cash flow along with prudent capital management strategies, it's likely to offer the company proper financial strength and growth flexibility to maintain its growth momentum through continued infrastructure of non-core assets and cost cuts. AT&T expects to maintain a dividend payout rate moving forward. I expect AT&T to utilize its free cash flow to drive substantial shareholders' returns. Analysts expect the company to be able to provide a 10% annual return. That's pretty impressive in this expensive market. Even though AT&T did have a down year due to the Rona situation, the fourth quarter 2020 revenues still look pretty good. Consolidated revenues of $45.7 billion, $10.1 billion cash from operations, total expenditures of $2.4 billion, gross capital investment of $4.3 billion, free cash flow of $7.7 billion with a total dividend payout ratio of 49%. $19.7 billion of gross capital investments, free cash flow of $27.5 billion with a total dividend payout ratio of 55%. In 2021, AT&T expects consolidated revenue growth in the $26 billion realm, gross capital investments in the $21 billion range with capital expenditures in the $18 billion range. 2021 free cash flow of $26 billion with a full year total dividend payout ratio in the high 50% range. Seems to me like really strong numbers along with strong potential on the upside for a long-term investment. Going forward, I expect AT&T to utilize its free cash flow to drive substantial shareholder returns. Through dividends and debt paydowns, I believe analysts are correct on the 10% annual returns, which may even be higher. That's a pretty impressive ROI. As of the recording of this video, I do own this stock. I have approximately 20 shares at a 7.3% average yield with a cost basis of $29. I like AT&T anywhere under $30 a share. For the long term, I plan on getting this to one of my biggest holdings. This concludes the video. I hope you all enjoyed the content. Don't forget to like and subscribe. Thank you for watching. I hope to catch you all on the next one.